everyone, and welcome to the Vancouver Resource Investment Conference YouTube channel. I'm very excited to welcome our guest today. It is the founder and former CEO of Sprott US Holdings and the CEO of Rule Investment Media, none other than Mr. Rick Rule. Happy to have you on the show.
Jesse, thank you for having me on. I enjoy this process.
Excellent. I want to start with a broad question before we dive into more specifics, and that is, what are you most focused on in the commodity space as we look ahead to 2023?
I have to say, the current malaise in the commodity price makes me extremely greedy. I'm sort of the anti-momentum guy. And so I'm really excited across the landscape. It seems to me like if I take a 5-year view at least, I can't lose in the oil and gas business. I can't lose in the uranium business. It will be very tough for me to lose if I have a 5-year viewpoint in bulk commodities, the reopening of China as an example, and the impending shortage in copper. I think that understanding the pivot to a more electric economy, I'm not talking just about electric vehicles, but rather batteries and the electrification of emerging markets, creates spectacular opportunities. What I wish I had been more successful with last year, and what I hope to be successful with next year, is a return for my own portfolio to risk on. I haven't needed to be in juniors for the last 5 years because there was enough opportunity in developers, in lending, and in seniors. But I see a circumstance where the junior issuers played chicken with capital markets and lost, where they're going to need to refill their treasuries. And I'm hoping that the private placement terms that I enjoy in the balance of 2020, well, there's not much 2022 left, but in 2023, I'm hoping that the opportunities that will unfold for me in 2023 will resemble the opportunities that unfolded for me in 1999 and 2000, the last capital drought that was in front of a mining boom. Whether or not that will occur is a different circumstance. But you asked me what excited me.
Very interesting. I want to touch on a recent post you made on LinkedIn, where you were talking about the Paris agreements. They're not economic, they're not meaningful. Carbon loadings are a problem, but the current solutions are political and uneconomic. We need a major rethink. I couldn't agree with you more there. And we're seeing signs everywhere of this so-called new green economy kind of falling apart when it comes down to the actual physics of implementing it in the time frame that the political elite would like to implement it. So, are you seeing the same thing? And what does this mean for commodities like lithium, cobalt, and graphite, where much of the bull case revolves around this so-called new green economy and a transition to EVs?
Jesse, let's start by saying that the carbon problem is real. And I happen to believe that it's partially man-made, and I think that we need to deal with it. I think in the range of problems that face humanity, that global warming is substantially less problematic than nuclear proliferation. Now, let's look at how we attack it. The investment community and governments have spent approximately $4.6 trillion on non-stable alternative energy strategies for the last 30 years. And they have reduced the market share of hydrocarbons from 82% to 81%, which is to say they've bought 1% market share for $4.6 trillion. Let's too look at the entirety of ES&G, and let's look at the S part. 1.2 billion people on Earth have no access to electricity. Another 2 billion people on Earth have access to unaffordable or intermittent electricity. Jesse, those people want to live the way that people who will be attending your conference live. And that will require more energy and more electricity, irrespective of what the big thinkers think. The people who have access to intermittent or no access to power at all shake their heads in wonderment that 550 of the world's elite take private jets to Egypt to tell these people that they don't have the right to access electricity, to have a single light bulb in their wattle hut. That's problematic from my point of view. I think that the world needs more electricity, and for the next 50 years, much of it will be supplied by hydrocarbons, irrespective of what we do or think. That's just the reality. I think the world needs more wind. I think the world needs more solar. I think the world needs more geothermal. I think the world needs more nuclear. We need and are going to consume more power, and we need to get ourselves around to that way of thinking. Much of the generation will be distributed. It will need to be transported, which means we need copper. Much of that power will need to be stored, which means that we need vanadium, we need lithium, we need copper, we need cobalt, we need all of the above. The point of my post was not to say that global warming wasn't a challenge. It was to say that we need to be realistic about our assumptions, and we need to be realistic about the way we deal with it. And by the way, we need to be much less condescending towards the poorest third of humanity. The idea that the savings are going to occur from people who are already very low hydrocarbon users per capita, and by the way, from people whose historic contribution to carbon loadings have been lower than they have in the West, is hypocritical at best. It's also misinformed. It's not going to happen. We've learned in places like Germany and Holland and France and Italy and Spain, and we will learn too, sooner or later in North America, that the type of economic sacrifice that the big thinkers are asking everybody else to make in conferences that they fly to on private jets are unacceptable to Western consumers. They're acceptable to Western consumers if the costs are borne by people who are already much poorer than they are. And by the way, it's not going to occur. If you take yourself to Malawi and you ask somebody in Malawi to sacrifice their standard of living so that Germans can burn coal, the response will simply be that the Malawians, as they should, are shaking their heads in wonderment.
Absolutely. That was very succinctly said. And I definitely think that we have a much longer way to go. I think this could be a decades long if we truly are talking about an energy transition. And add that to the fact that lower density energy sources have never been in an energy transition when you're trying to make a more efficient energy system. Um,
That's a hugely important point. Hydrocarbons are popular because they're efficient and they're cheap. And if you're budget constrained, which most people in the world are, um, I'm all for, I guess, pricing externalities. But people better understand the impact of that on their lifestyle, and they better be prepared to conserve somewhere else.
Yeah, I'd like to shift to hydrocarbons actually, and where you see oil positioned at the moment, because the price for WTI crude has fallen. We're at about $73 a barrel as we sit here today. There's talk of OPEC plus cuts. We've got the potential for China to reopen, bringing on a lot of demand. And of course, the political class and all their genius putting a price cap on Russian oil, putting embargoes on Russian oil. I mean, this is certainly a chaotic time to be an oil investor, but how do you see all this playing out?
I see it as a wonderful time to be an oil and gas investor. You ignore the noise and follow the arithmetic. So let's take these in a chaotic, if that's the right phrase, order. I think demand in the near term being 12 months for oil, absent a synchronized global recession, increases for the simple fact that the Chinese citizenry have expressed an unwillingness to continue with the shutdown in China. And as China begins to reopen, one of the things that happens is that people will drive and people will fly and people will eat in restaurants. They'll do whatever it is that people do, and demand for oil will increase. At the same time, the political class worldwide has decapitalized the oil industry. While President Biden has said that the oil industry is making unconscionable profits, by the way, he didn't complain about their unconscionable losses during COVID, and suggesting that they lower the price of oil, he has also said that the assets that he would like them to invest in will become stranded politically by 2030. In other words, he's saying invest billions of dollars now, and I'm going to steal it from you in 8 years. hardly the way to stimulate a boom in oil. The biggest institutional investors in the world, people like Norges Bank, ironically, people whose money came from oil, are disinvesting in the energy business. It is estimated now that the energy business, the global oil business, is deferring $1 billion a day in sustaining capital and new project investment. Now, that doesn't bite you in a quarter. It maybe doesn't bite you in a half, but it certainly bites you in 2 years. And we're seeing a global underinvestment in sustaining capital expenditures. OPEC will cut production, not because they say they will, but because they're underinvesting and they won't be able to maintain their production. Production in Mexico, production in Venezuela, production in Nigeria, production in Russia, production in Iran has been constrained not by politics, but rather by a lack of sustaining capital investment. And that's what you're seeing in the oil and gas business. For those companies and those people who are making sustaining capital investments, those people who are maintaining their productive capacity during a period where there are already very attractive margins, aren't going to do well. They're going to do stupidly, stupidly well. And mercifully for me, in my dotage, in my old age, I'm going to be one of those. Could the oil price fall in a recession from $75 to $50? Absolutely. But remember that the fully loaded cost to produce a barrel of oil worldwide, I don't mean the lifting cost. I mean cost of capital, I mean social rents, exceeds $60 a barrel. So any period of time when the oil price falls below $60 a barrel, the industry is decapitalizing itself. It's cannibalizing itself. It's cannibalizing itself right now during a period of high oil prices. And this and a growing demand for energy worldwide absolutely guarantees, in my point of view, that oil and gas investors who can ignore volatility will be able to take advantage of cyclicality. You have a whole band of Canadian producers who are generating 15 to 20% free cash margins. They're giving half of it back to shareholders, and they're reinvesting the other half, not to maintain production, but actually to grow production during a period of time where their global competitors are decapitalizing their asset bases. There's nothing better than that in the 5-year time frame for investors.
I wanted to follow up on that and ask about potential geopolitical risk in a place like Canada specifically, because normally we think about more, places that a lot of people consider out there, places like Africa, places where the rule of law is not so-called, enforced as much as it is. However, we're seeing the Liberals, NDP alike, badmouth oil, say big oil's making too much profit. We're going to put windfall taxes on them. The Biden administration giving much of the same message in America as you were touching on. How much of a risk is this to investors? And because of this, do you think it's important to be geographically diversified with your oil and gas investments?
I think the risk is very high to answer the first question. I think that the political class is out of touch. I think, too, that there is a group of, not a conspiracy, but there's a group of very important political players, the George Soroses, the WEFs of the world, the Hewlett Foundation, the Tides Foundation, that make very large campaign contributions that are anti-energy. I would suggest to you that both Biden and Trudeau are, although they're philosophically aligned, they're also hired guns. And this anti-oil group have been extremely effective politically. But I don't think that they can stand ultimately in the face of human progress. So I think, despite the fact that Mr. Trudeau isn't smart enough, as an example, to see a business case for Canadian natural gas, that the Qataris are. I think, too, that the market will find a way around Biden's idiocy with regards to the Keystone Pipeline. I mean, the way has been found, the reversal of the Colonial Pipeline. It used to take oil from the U.S. Gulf Coast up to Illinois and Ohio. Now it's going to take Canadian oil from Illinois and Ohio down to the Gulf Coast. I mean, the market will always find a way to outsmart stupid politicians, but it will take time. It'll be inefficient. It'll be clunky. And I think that'll challenge some investors. From my own point of view, ironically, as a citizen, Mr. Trudeau and Mr. Biden are my worst enemies. As an investor, they're my best friends. They've caused a whole group of investors who are richer than me and smarter than me to get out of my way and not compete with me in hydrocarbons. You may know, Jesse, I'm starting a new bank. This will be the 7th de novo bank of my career. It never would have occurred to me 15 years ago that I could effectively compete in US or Calgary in the production credit facility business and the oil and gas business. There were great banks there. Royal Bank of Canada, TD Bank, Bank of Montreal, Chase Manhattan Bank, Wells Fargo Bank, Bank of America. But they're moving out of the business. They're leaving the business. Now, even an old, fat, bald 69-year-old guy like me can win a race if I'm the only guy running. The fact that they're decapitalizing the oil and gas business, to me, is one of the most wonderful opportunities of my career. It's horrific for humankind. It's wonderful for Rick Rule.
And I guess just the tail end of that question is, do you think geographic diversification is important as an oil investor?
I think it's important, but I think fundamentals are much more important. I would rather have a great deposit in a lousy place than a lousy deposit in a great place. The truth is that I've made more money in exploration in places that most folks can't spell than I have in places like Canada. There seems to be a fondness for investors to invest in places where the asset might not be stolen, but investing in assets that nobody would steal anyway. So from my own viewpoint, I want an absolute great deposit, hopefully with a great team. And as a consequence, I will take a less attractive place. And by the way, a jurisdiction like Canada or the United States, where the political elite are ill-disposed to you making money, is not an area that's riskless. It's odd, Jesse, we're going to get some hate for this, but it's odd that people who look like you and I do believe that money that's stolen from you by white people in English, according to the rule of law, is somehow less gone than when it disappears in Africa or Latin America or Asia. I assure you that the complexion of the thief or the process by which your capital is stolen is less important than the ultimate outcome. But people seem to be more comfortable with theft that occurs in a cultural context that they're from and understand. I've learned at 69 years of age that the complexion of the thief is less important.
That's a good way to put it. I like that. So let's finish on gold here. Q3 of this year was a record high for central bank gold purchases, bringing global central bank reserves back to levels not seen since the 1970s. So firstly, why are central banks accumulating gold at this rate? And do you think this trend will continue moving forward?
I can't answer the latter question because what central banks do has always mystified me. Why have they acquired gold? I think for two reasons. The first is the process of externality in the United States, which is to say where the United States has decided to weaponize its currency and impose its way of thinking on the rest of the world. Most of the rest of the world doesn't want to be involved as a vassal of the United States, particularly countries for whom the United States provides a physical risk: Russia, China, Iran, to a lesser extent, the Saudis. They are tired of the extraterritorial imposition of American policy and culture. And they have learned from the weaponization of the US dollar and the SWIFT banking system that they need to develop a way for a medium of exchange that's simultaneously a store of value and is not a US dollar. As little as they trust us, they trust each other even less. Which means that gold is a wonderful circumstance. And the second really goes to trust. if you look around the world for an asset class where your asset isn't simultaneously somebody else's liability, that is to say, a promise to pay, you naturally settle on gold. If you buy a whole bunch of US treasuries, you have two risks. One is that because of your political act, the US government says, we're not going to pay you. That's problematic. The other is the value proposition offered up by the US 30-year Treasury. They propose to pay you 4% a year in a currency that by their own measure is depreciating in purchasing power by 9% compounded. Return-free risk. And the US dollar is probably the best of the fiat currencies, which is to say the strength of the US dollar is not so much a reflection of the strength of the US as it is a weakness, a reflection of the weakness in the yuan, the yen, or the euro. So I think that gold has responded well to a global understanding that US hegemony is not good for most people in the world. And at the same time, an understanding in most countries that their own balance sheets are lousy, so everybody else's balance sheet is lousy too. The sort of exactly the lack of trust that has traditionally caused gold to do well over time. Gold, remember, is a medium of exchange that's simultaneously a store of value. Gold isn't a promise to pay. It's not a bond. It's payment in and of itself. And I think for that reason, and for the reason of its incredible liquidity, gold is the perfect central bank asset.
Interesting. Now, the VRIC is coming up. It's free to attend. Want to let everybody know. There's a link in the description below. Rick's going to be there. I'm going to be there. So I wanted to ask what you're planning to present at this year's VRIC.
I gave a speech at the VRIC 20 years ago that may have been the best speech I ever gave there. And it said that people in Vancouver have no excuse not to be millionaires. That Vancouver is the epicenter of speculative opportunity in the mining business, and having the locals edge, being able to attend conferences like the VCRIC, having access to the expertise, having access to the opportunities in the right market, which is to say a very, very, very bad market, gives you the ability to allocate capital more efficiently than other people do. That's what I'm going to talk about. I'm going to talk about the process of speculating in high risk, high reward private placements using what is in fact the insider's edge, which, by the way, is available to anybody who cares to work hard and employ it.
Great. Looking forward to that. And before I let you go, could you fill people in on the service you provide to investors helping to evaluate their commodities portfolios?
Yeah, in this case, a twofold offer, really. Anybody who cares what I have to say about natural resources might be more interested in what I have to say about their own natural resources. So any of them who wish may go to a website, ruralainvestmentmedia.com. List your natural resource stocks, please, not your crypto holdings. Please, not your tech stocks. Please, not your pot stocks. Your resource stocks. I'll rank them personally 1 to 10. I'll comment on those issues where I think my comments might have value. And if you're an accredited investor, if you care about private placements, in the question and comment section, write placements. Because I'm no longer securities licensed, I can tell you what I'm doing with my own money. It's not investment advice. It's free. Now, I don't do a private placement every week, so don't expect to get a communication every week. But every time I do a private placement in a public natural resource company, I will disclose it to the list that has identified themselves as interested by writing placements at Rural Investment Media. I'll tell you what I did. I'll tell you why I did it. I'll tell you what I think the opportunities are. I'll tell you what I think the risks are. And I'll give you the ability to contact the companies. Because I got involved in a placement doesn't mean that you should or that you will be allowed to. But the access to information will, at least for now, be free.
Excellent. That's great. I'll put a link in the description below so people can click that easily. And it was awesome speaking with you, and we'll see you at this year's VRIC.
Going to be a really good time. I look forward to it.
We actually need to have a damn good recession.
The Russian economy is a gas station run by the mafia. $41 trillion has been created out of nothing.
There's a stranglehold in China on most of these resources.
The outlook and fundamentals for the metals remains very, very strong.